For all verified facts, subscribe to our YouTube channel and click the bell icon to get the latest updates.
Hello and welcome to From the Front Lines. I'm Govindraj Ethiraj. Before we proceed, don't forget to press the bell icon to subscribe to continuing updates from the front lines as we bring them to you. Now, the Indian banking system has been under stress for some time. Now, this is not unusual to India. It's happening in many parts of the world thanks to COVID-19, not just the banking system, but the economy as well. But this is also the time when we as savers and depositors ask the question, is our money safe? Are our bank accounts safe? Are our fixed deposits safe? Can we sleep well at night knowing that nothing will happen to our hard-earned incomes and savings? Well, who better to put this question to than a veteran banker, Aditya Puri, Managing Director of HDFC Bank. Mr. Puri, thank you very much for joining us.
You're a good guy, and now you're allowing me to do my marketing as to why you should be with HDFC Bank. Firstly, we don't have an NPA problem. Two, we think COVID is an opportunity. Three is Standard & Poor thinks that we are one of the safest banks globally, and even the COVID, with all its problems, cannot result in a downgrade. So that's not me saying it, that's Standard & Poor. If you look at what Moody's says, they said they've got fantastic system. So what have we got? We got capital adequacy of 18.5%. We've got the lowest NPA ratio, about 1.3 or 1.4%. If you take our contingent provisioning as well as our specific provisioning, we are provided 130% of our NPAs. So you can't take a hit to the profit and loss account. We spent on our technology. We've got the distribution. We are not seeing a major jump in NPAs. Yes, some jump will come, but that we are providing for. And we have all the liquidity in the world. So I think this is like guinea gold, man. So what you need to see is what's the bank's rating, what's his NPAs, what's his distribution, what's his margin, what's his capital. And that's how you get your money back.
Right.
So if he's making money and he hasn't given money where he's not going to get it back, and the rating agencies think so, and all of us HDFC Bank employees think so, and I think so, then you're very safe.
Let me ask the question from the other side. How do you ensure as a bank that all these organizational processes are in place? How do you ensure, for instance, that non-performing assets are under control? How do you ensure that capital adequacy ratio is being managed? Or more importantly, how do you ensure that your bank remains robust and trustworthy?
Firstly, we recognize that we are a fiduciary organization. We must pay our money back to the depositors. So our credit process, our target market, our lending, our monitoring, our technology are all focused on ensuring that we have the margin, and that margin is sufficient to pay for the normal bad debts, and we create provision for that. And that leaves us with enough money to pay the investors as well as interest to the companies. And that's how we will reach the capital adequacy. Because if you make losses, your capital gets wiped out. We keep adding to our capital adequacy with the reserves. If you don't provide, then that's very sad, because that lack of provisioning will actually lead to your capital erosion, but it's disguised. So, and the brand. Your brand also has to project that, look, this is what we stand for. And that's all. After all, what is a brand? Brand is what we stand for. That trust, integrity, and your money is safe. And so I'll tell you one very good illustration. One of the iconic actors in this country, after I'd given a speech at the GQ Awards, asked me, you bankers are very greedy, and because of that we lose. So I said, sir, can I ask you a question? If you go to the market and everybody is selling tomatoes for 2 rupees a kilo, and there's one guy selling it for 8 annas, and you buy that tomato from that 8 anna fellow, are you greedy? Nuts? Or you lack common sense? What is it? So there is no free ride in this country, Govind. That fellow is selling it for 8 annas because there's a problem. Similarly, if you go to people that are offering you ridiculous returns, he can't get those returns. So you must ask them, what is my risk? A normal fellow, when we present to a customer, we say, first you tell us what is your risk appetite. Some will say, I under no circumstances I want my capital hit. Some will say, I'm willing to take risk on 20% of my portfolio because I'm 45 years old. Some will say, like me, old 70, look, I work very hard. I want the cash under my backside and enjoy myself. And I want no risk. I don't want to think about it. I've thought about it all my life. Now I don't want to think about it. I want to enjoy. So ultimately, it's common sense. Why would somebody give you a very high return? You're taking risks. So don't do these things. I think the Reserve Bank also says. And why would somebody give you a tip? Somebody asked me what would be the dollar rupee. I said, if I knew that, I would be at the Bahamas. Why would I talk to you? I can give you some sort of, some reason. So it's reasonable, simple. That fellow who follows all these processes will have a look like this: good capital adequacy, good provisioning, good margin, good distribution, good growth rate, because he's catered for the future.
Right. And here's the last question. Now, these are difficult times. These are COVID-19 times, and the economy and banking sector, as we've talked about earlier, has been under stress for a while. Many businesses, particularly small businesses, are under stress. And how does this affect banks? I mean, to what extent does it affect them? And how do banks ensure that they stay safe in these times? In some ways, going back to the primary question, are my deposits with you safe?
So there are two parts to this. Are banks safe? I think so. I think there is, but the safety depends, is a relative safety. So if you take our case, we have lent, because we've been very careful. When I say you define the target market, our target market is middle and upper middle when we want to do business. Separately, we lend to sustainable livelihood, but that's something that is not our business. So if you have lent to the better sections of society, those guys will not be hit so much at this point of time. So the AAA corporates, the people who have salaries, if you've lent to them, the guys who have a local business, they won't be hit. You know, you'll be surprised that the banyas, etc., they're hardly leveraged. So they won't be hit. It's the guys, and then you have to price it right. So if you go down the risk ladder, you must move up the pricing very substantially to pay for the defaults. So the fellows who are with the right target market, as I told you earlier, Govind, as far as we think, yes, will there be some uptick? Yes, even in our portfolio. Is it going to be large? Answer is no. Would we have provided for? The answer is yes. Do we see COVID as an opportunity? Absolutely. The whole world is in a turmoil. We are sitting on good capital adequacy and deposits. What more can I ask for? Anybody who wants to sell his asset to me, I'm a buyer. So we are sitting on deposits. We have good capital adequacy. Our NPAs are under control. And we are growing. You see the results. So we see this as an opportunity to gain market share. HDFC Bank will only become stronger and stronger over the next 2 to 3 years.
So last question, Mr. Puri. So you're retiring in less than a month. When you look back at what you've built and what you've been part of, what is one mistake that you could have made or others can make? And when you think about it, what is it that you could tell younger people or others that who are looking at this to keep in mind, particularly when running or building a banking institution?
No, see, the mistake is very simple. If you don't price right, if you don't monitor, if you don't adjust your strategies to what is happening, the moment you see that you're not going to be able to pay a return to your shareholder or have any issue, and so there are ratios for this to pay interest to your depositor and his principal, you either stop business or you make sure that you change your model. And the good part is, before I joined HDFC Bank, I had 20 years experience in about 12 countries. So I made my mistakes with Citibank and learned a lot there. And fortunately, that gave me the ability, along with a very, very strong team. We hired the best. Even when we started HDFC Bank, today everybody wants to say, oh, these fellows made money. These same fellows were laughing when we left and said, you're bloody nuts. So we took the risk, we worked bloody hard, and we made fair money white out of options, which came because the people did well. So, when we all left, you needed a passion. The guys who initially came to the bank said, we can create something. People thought I was nuts. I had golden handcuffs in Citibank when I left. I left a couple of $1 million at that time, 25 years on the table. Because I said, one, I feel the satisfaction of doing something. And I must tell for you all the youngsters, if you go into something just to make money, you're going to fail. You have to go into your passion. You have to work like bloody hell. Money will come as a byproduct.
Mr. Puri, thank you so much for sharing your thoughts and insights on not just banking, but your unique approach to it.